Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today I've got Kasper Rasmussen with me. He's from Denmark. And the way that I found Kasper is I'm going to show you his Twitter page. I go on Twitter, I look at a lot of charting, and his name on Twitter is Uselink. If you want to follow him, definitely hit him up at UselinkINV. And he's got some amazing charts for commodities. And I share a lot of his work. He does a lot of long-term, very clean looking charts, probably cleaner than mine. I'm kind of a throw together, keep it moving type of guy, but he's got a lot of really good charts on precious metals, on energy sectors like uranium, especially. And he just throws these things up there continually. I see him all the time, and they're just beautiful looking charts. He does a lot of fractal analysis. He compares different time frames and all that. Looks beautiful. So I'm going to jump out here 2 seconds. So Kasper, tell me a little bit about your background. What got you into investing? What got you into technical analysis? What got you here?
Yeah, well, I'm same as you, educated engineer. So therefore, like, data has always been something that I found very interesting. You know, like doing some measurements, getting the data, and then doing some sort of analysis on them has always been very interesting to me. So I think like 5 years ago, I stumbled upon the Market Sniper on YouTube. And at that time, I also started to invest, randomly into stocks and so on. I didn't know what I was doing at that point. But then I started to see his channel, actually saw all of his videos more or less. And then that was actually the kickstart to me, going into this rabbit hole called technical analysis. And yeah, then I think like 2 years ago, I started to post on Twitter, just what I was seeing in the markets. And yeah, like 2 years later, I have a decent amount of followers, which is very nice. And yeah, I love to do charting every day, more or less. And as you mentioned, most of them are somewhat long term, but I can also do very short. If there is a very important level that is about to break out, that is very meaningful, I will post that as well. But I tend to see, the long term fractals or whatever, formations is what actually gets the most attention from the followers. So. So yeah, that's how I actually started into it. And yeah.
So from all your analysis that you've performed right now, what sectors are your favorite sectors? What gets your blood flowing when you see the charts and you say, man, this looks like a really good setup?
Yeah, I mean, for people that have followed me, I started screaming about uranium 2 years ago, just at the end of 2020. Well, 1.5 years ago. But anyways, I started to say that this is the best setup that I have seen in a long time. And also the fundamental for uranium, the supply and demand situation is just, I mean, you don't get a better setup in my book, from a fundamental point of view, but also from a technical point of view. And at that point, I said that I was going to go heavily into uranium, maybe more that most clever guys would say is is good. But I mean, it has paid off very well, even though we have had like a 30-40%, drawback here in the last half a year. I mean, I was in very early, and yeah, still sitting on very, very nice gains. And I'm positive that the gains for uranium, that there is a lot more to come over the next maybe 2 to 5 years, depending on how fast the things is going. But yeah, uranium for sure is something I like.
So what makes you so confident that we still have some length left in this bull market uranium? What are you seeing? What gives you that confidence that we still have 2 to 5 years or whatever we have left in it?
Yeah, I mean, there's two ways I look at it. The spot price for sure is only at, like, I can't remember exactly, like, is it 50 now, I guess? Yeah, 50 bucks or so. Mm-hmm. And the previous bull market peaked at 140. And the supply and demand story now is even better compared to then, because back then it was more driven to let's say fear that the utilities couldn't get their uranium. But now they have an actual situation where they, at some point, or even now, it's very, very difficult for them to in the future to get cheap uranium. So that's one thing, one side of it. And also I think, the Fukushima accident, like 10 years ago, really, dried out, the sentiment for uranium for like 10 years, and all the excessive supply that Japan had to sell, made a massive overflow of uranium into the market. So the uranium sector has been, was pinned down to basically, the most bearish you have seen at the COVID low, more or less. And you also saw, the big flush at the COVID low, which to me was the bottom for this like 15 years long uranium bear market. So I'm confident that we will see triple digit, uranium again. And I'm also confident that we will get, above the 140, just basically given, the what's happening right now in the uranium space, from China to France to maybe even Germany, I can see, but also in America, there's a lot of things brewing. So yeah, fundamentally, it's still the perfect setup to me, even though it's been 2 years since I entered, that sector. So yeah.
So I know you entered pretty early. You were talking about 2020, 2 years ago.
Mhm.
Are you still adding into the sector? Are you just holding on? What are you doing now with uranium?
I think I bought like 80% of my uranium portfolio back then. And since then I have added, like the remaining 20% on big pullbacks in each stock. Because, I look back on the previous bull market, we had like 5 or 6 30 to 40% pullbacks in the URA ETF. So I knew that they were coming at some point. So whenever I started to get below this 20%, drawdown, I started to add up. So that is my plan, to do that for the first, like 2 or 3 pullbacks, and then I'll just, at that point, I'll say this is my full position, and then I'll just ride it all the way up, hopefully.
Are you adding on this current pullback?
Yeah, I added some last week. I think I bought more Energy Fuels, Denison. What was the last one? I can't remember. Yeah, what is called Find. It's Baseload. Sorry, Baseload. I added these 3. So,
what are your favorite companies? Since you're spouting off companies, what are your favorite companies, and why are they your favorite companies?
I think, as mentioned, the first one, Energy Fuels. I guess it's a well-known, somewhat big company as well, and they have a lot of uranium in the ground, and they can produce. And also they have this rare earth. I don't know how important it is, but they have this rare earth sector, I guess, as well, which also maybe could add some value. So definitely Energy Fuels. Also, given it was one of the best performers back in the previous bull market, so people they know Energy Fuels. So when the things this bull market gets going again, I'm sure a lot of people that's new to the sector will buy into Energy Fuels, for example, because it was a good story back then. I think it gained like 7,000% last bull market or so. So definitely Energy Fuels, and also Baseload, which is a very, very small company, but it's I think it's one of those companies that could do some very, very good returns if they keep up with what they are doing. But that is a lot more high risk, so that is only a very small percentage that I have in Baseload. But that could be one to remember for the grandkids, I guess, if we're lucky.
Yeah,
so,
yeah, that's one of my overweight exploration positions.
Yeah, same here.
Hopefully, my grandkids get some of that money.
Yeah, yeah, exactly.
So you got Energy Fuels, you got Baseload. Is there anything else? You said Denison Mines. I know they're very technically competent.
Yeah.
I think they're doing in situ, however you want to call it, drilling, or they stick it in, put it through.
Yeah.
Super low cost, from what I understand. So Denison Mines, is there anything else that you really like?
Yeah, I have the regular ones like Cameco, of course. I think you need to have Cameco because it's a very, very big company, and it's somewhat stable compared to the smaller ones, I guess, from a volatility point of view. And they don't need to go out to get money and so on because they are so big. So of course, Cameco, NextGen as well, Fission. Then I have the smaller ones like Canalaska. I can't even remember them on top of my head, but
Sky
I have a
Harbor,
mix.
stuff like that.
Yeah, exactly. So I have a mix of juniors, exploration, and some of the bigger ones. So yeah.
Okay, so when you're looking at uranium, or you're looking at any type of sector, one, how did you identify that uranium was cheap and going to be a good investment? And two, how did you play it? Like, what was your strategy for your investing? So how did you identify where the value was? And then second, how did you play it?
Yeah, I mean, when I look at first of all with uranium, I looked at the spot price. You can see right off the bat, you know, it has been in a like 10-year bear market. And as the famous guy Rick Rule likes to say, you know, either the prices go up or the lights go out. I mean, that's a very good way of saying it, because we need energy, especially in these days, right? I guess it's a very good way of looking at it. So that was my first way of looking at it. But then I start to compare, you know, the uranium miners compared to the uranium spot price itself. And if you look at that ratio, you have a very, very nice setup. And that's actually also a part of my exit plan, which we can get to later on. But that's how I will start to scale out at some point, looking at that ratio alone.
Okay, do you have any like particular charts that you could share with us to show us kind of what you see and maybe what you evaluate?
Yeah, I can for sure do that. And let's just stay with uranium, because we have talked so much about it. That's also my favorite sector. So where share screen, there it is. Okay. Is it all clear, I guess?
Yes, looks great.
Awesome. Okay, yeah, just like I just mentioned, you know, this is the URA ETF, which everyone knows. And then below here we have the ratio between the URA and the spot price. And as we started to talk about, you know, this was for me was the complete capitulation for the uranium bear market, sorry, the COVID low. And then my entry at that point was basically, you know, this. I love doing, you know, wedges and so on the chart. I love that one. So this was my right here, September 2020 was my entry. I can zoom in a bit here if that even makes it a bit better. But this was my entry for uranium, right? This setup right here, and yeah, so this is where I got in with 80% of my portfolio, and then I have bought, you know, these pullbacks here with the remaining 20%, for now at least. But one thing I also looked at, and also one thing I think that most people don't do often enough, is comparing, you know, ratios. It could be in this case, you know, URA against the spot price, but it could also be against, you know, the Nasdaq or gold, silver, whatever. I mean, it's very underused in my book, because if you have some money you want to invest, you need to look at what sector has the best setup. Maybe you like gold, but if gold if you can find another, it could be platinum, for example. If you can see platinum is a better play, you should definitely invest into platinum as well. So that's the way I see it.
Do you like platinum? I know that you brought it up, but do you?
Yeah, I do. What do you like? Actually,
yeah. What do you like about platinum? What do you see with platinum?
I mean, platinum is of course, you know, a material that is very well, not very, it's somewhat sensitive to the overall economy, I guess, because it's used in cars as well. So if the economy goes into the tank, I guess then people don't buy that many cars and so on. But then again, you know, platinum is actually one of the most rarest metals you can find, more or less. And I think it's like 30 or 40%, which comes out of Russia or Kazakhstan. And if we see a ban, you know, for platinum, then you cut off like 30% of the supply, and that will wreak havoc, you know, in this sector, because it's such a small sector, right? And if you just suddenly remove 30% of the supply, I mean, the prices will not only go up 30%, it will go up like many multiples of that. So I like platinum as well. I actually have a few physical platinum coins as well, just to have that side of the deal as well. So I like platinum.
Yeah. Do you have any charts that you can share with platinum?
Yes, I do actually. I think if I remember correctly,
this is one of the platinum was kind of what draw uranium and platinum were the ones that I saw on your Twitter. So I was like, man, I really gotta check them out.
I think I posted one yesterday, because that was also one that I want to bring onto this show when we agreed to do it here today. So let me see. Yeah. Is it clear? I guess. Yeah, you can see.
Yes,
Okay.
it's very clear.
Yeah, this was something that I posted yesterday, and this is we have platinum, and then adjusted for inflation, and then I want to compare, the previous bear market, from 1986 down to the start of the 2000s. Then you have the big run up to 2008. And then what I see here is basically more or less, the same setup, right? We have the big breakout here, and then we have the back test. And then I just used this fractal from here to the top to see how it would look, and also adding in the Fibonacci levels to see how it looked. And funny enough, of course, I adjusted it a bit, but this the upper trend line, the red one here, could, if we are lucky, mark the end of the platinum bull market in like 8 years or so. That's also why. Yeah, go ahead.
Do you know what price that correlates to? Just curious.
Yeah, this would be.
That's a ratio. That's platinum to the consumer price index, I see.
Yeah, so I think this ratio is like a factor of 6, from where we are now to the top. So if this chart holds up, platinum will beat inflation by a factor of 6. And as we all know, platinum is not standing still these days, right? So platinum will also increase. My target, for platinum is when this bull run is over, is 7,500. And right now we are at 900, right? I think I've posted like a year ago that chart as well. Why I think platinum will go to 8,000. And that is purely based on previous price action and so on. Nothing more, nothing less. So if history repeats itself, then I guess that's where I see it going. I could be wrong, I guess, but that's my maximum bullish case.
That's a great target. Mine's somewhere between 4,000 and 10,000. So
yeah, so I guess right in the middle there.
Close.
That's perfect. Yeah. So
yeah, and if something goes crazy, then yeah, things can go crazy. But
yeah, exactly. Yeah, it
yes.
could.
So how are you playing anything with platinum? Are you just doing like physical platinum? Are you investing in any of the companies? Like, is there anything that you're doing there?
Yeah, I have a few companies like PLG. Everyone knows PLG. Haven't been good to me the past half a year, but that's one. Yeah, it is what it is. And then Siberian Stillwater, I guess it's called. These two I hold, and then also Generation Mining, and I can't remember the last one, to be honest. But I have like 3 or 4 plays, not a big position, but if platinum gets going, these will do very well for sure. Many multiples of gains you will see in these companies. So yeah.
What other sectors do you follow that you'd like to share? Is there anything else that you really like perhaps natural gas or something like that?
Yeah, actually, I'm not in natural gas right now, but just before we went live, I told you that that like 2 years ago, 1.5 years ago, I talked to my friends and colleagues at work, and I said that natural gas, soybeans, wheat, what we have, corn, these were all going to do very well over the next, let's say, 5 years or so, and at that point they were not even paying attention, right? They were just like, oh, that doesn't make any sense because it's just keep going cheaper and cheaper. And then a year later, they came back to me and asked, how can we get into this natural gas and so on. Let me see here, 1 second. This is a ticker I use for the European market regarding gas. So it reflects, the overall gas price. But anyways, I think you'll get my point here. Oops, sorry. So this was natural gas to me, and what I was looking at that time was actually only one trend line, and this was the one we got from here, from 14 down to 2021 maybe, and here I started to say that if we get a break here, then I'm gonna buy a small position in natural gas, even though I haven't heard about it before, more or less, right? I know I have, but but it's not something you see on the news, right? You always hear the big companies and so on, but no one is talking about natural gas, until recently, right? Until we have like 10,000%, well, 1,000% increase in gas prices here in Europe. So yeah, this was my entry. I can't remember exactly, but that again at the end of 2020 was my entry in gas, and I did exit that trade, some time ago, but I'm definitely looking to go into gas if we break this trend line again, So
Definitely.
So yeah.
Natural gas is actually my favorite sector, as weird as it is.
Okay. Yeah.
I went very heavily in at that time at like September, October, November of 2020. And it was oil, natural gas, and uranium were the ones that I really liked.
Yeah.
So it agrees with basically the same charts that I've done too. But yeah, do you remain a bull in natural gas, or are you going to wait and see what the charts tell you? What are you doing with natural gas from here on out?
I think given, especially since Russia invaded Ukraine and so on, I think the case for natural gas has become even better. And the funny thing is, right, I think the Danish government wants to wants to get rid of natural gas in like 10 years time or so. But as we know from oil, right, they also want to cut out oil. And what have oil done since in the past 2 years? It's gone ballistic. So I guess the same will happen to gas, because the big companies will not do any investing into gas if they know in 10 years time it's going to be obsolete. So they will not do any more drilling and so on. And in the meantime, the price, as we have seen in oil, will just go higher and higher. So yeah, I'm a bull in gas as well, for sure, no doubt.
Well, that's good. That's good. Is there any other sectors that you follow or anything like that you'd like to share?
Yeah, I mean, like a lot of people on Twitter love and hate, gold and silver. But then, but I think silver is one of those assets right now that will do you very well over the next 5 to 10 years. I have, even though everyone hates it right now, because it hasn't done anything for like 2 years, but gold and silver is definitely something that I love. Same for the precious, for the physical that I have bought. When I bought my first silver coin, I mean, I was hooked right from the get-go. So I love gold and silver, no doubt. And yeah, also let me see if I can find a chart. This is a chart that I posted yesterday as well. And this was kind of just to mimic or to copy, the run we had, from it's a big chart, as you can see. It's 150 years old. But what I started to see was, somewhat of a fractal starting here. Then we get the test to the previous top, more or less, a major pullback, and then we had, the famous run in the 70s. And what I see right now is basically it could be somewhat the same, right? We have the formation here, similar to the one over here. The retest at the top, big pullback, and then if we get a similar 90s, 70s run up, it could look something like this, right? Where we get to like 200, 300, 400. I don't want to pick a number, but I'm same for uranium and gold and silver. I'm positive that we will see triple-digit silver in this decade for sure. So this
is huge. I can see what $300 if it were to repeat, and this is the silver in the US dollar.
Yeah, exactly. And this is on a log scale, just so people this is log scale, by the way. But this would be like 300-ish silver, during this decade, if history is anything we can rely on, I guess.
Wow, that's what I really like about this chart is the size of the chart. You go all the way back into the 1800s, and
yeah, exactly.
and this is eerily the setup is eerily familiar to the previous setup. So yeah, we basically went from one level to another level, and then we're going to go to another level.
Correct. Exactly.
That's crazy.
Completely. Yeah, that's also what I wanted to show with these green lines, right? We're about to enter, the next level 3, let's say, and we will probably be there for many years as well. And then in like 20 years time or so, whatever, 30 maybe, I don't know, we will get a similar opportunity again. in silver. That's my opinion.
So basically, this is a rare opportunity in history to be invested in precious metals or commodities in general, because these bull markets only come once every however many years.
Exactly. Yes.
So
yes.
Well, that's good. That's good.
I totally agree. Yeah, it's not once in a lifetime, but you don't get these setups in my book doesn't come around that often. So especially silver and uranium, these are the two that in my book are the best places to be. Energy and of course silver. Yeah. So
it's good. That's good. So your strategies here are, so you're playing physical metals, you're playing stocks, miners, royalty companies. Like, how are you playing these investments? Oh wow, that's another really good chart there.
Yeah, this is basically the previous one where I removed this fractal setup. And this was just to show, what these lows on this trend line, what happened there. We have some major events, during the time we have World War II, Vietnam, Gulf War, 9/11, and then we have the COVID-19, right? So these points on the line is just major events during our lifetime. So yes, it was just a funny way to show it, I guess. So.
And are you mainly playing it with stocks, equities? Or are you playing it with physical metals, a little bit of both? What's your strategy for playing what you're seeing in the charts here?
Yeah, I have like 10% of my wealth, I guess, in physical metals, maybe a bit less. And then, as you mentioned, I played, stocks, miners, royalty companies, within, uranium, silver, gold, platinum, palladium, and so on. And then I also have some other investments in other commodities that people don't talk about, like hogs, pigs, more or less. They have an insanely good setup if you look at it right now, and that will also do very well. I can actually show it to you because I don't think many people talk about that one. If I can remember the name for it, just 1 second. Yeah, exactly. Here it is. This is a log scale again. This is a European ETF, so bear in mind, but still it tracks, the overall prices and so on.
So this is for hogs.
This is for hogs, yeah. And you have the COVID undercut low, right? And then you're back into the wedge. And once we break here, right, I guess you can easily, well, nothing is easy, but you can make a decent amount of gains, in the next 2 to 5 years, 100, 200% in something as boring as hogs, right? So it doesn't have to be, it doesn't have to be what everyone is talking about, gold and silver and tech stocks and so on. I mean, if you can do 200%, by placing a small amount of your money on hogs, like it's amazing, I guess. So
is that something that you're playing right now?
No, not right now. No, not right now. I mean, I want to do it, but I need to see the conviction for the breakout here, and then I will add into buy into that position as well.
Okay.
So yeah.
I see what you're saying. Yeah, you're waiting for the breakout, buying to strength.
Yeah, exactly. Yeah, I could buy here, given we have tested, this previous top here, but yeah, right now I'm just waiting.
Okay. And so we've got the sectors that you like. We've got the strategy down, kind of you're playing the equities, you're playing some physical precious metals. What are you looking at to either monitor your investments or give you a sell signal? Like how are you ensuring that these things are still good to go? How are you monitoring them?
Yeah, let's go back to the uranium example here, because yeah, here it is. Again, this was the chart that I showed in the beginning. URA divided by the uranium spot price. And this chart here will be more or less my exit strategy for uranium. What this is actually, how well the miners are performing compared to the spot price or the uranium spot price. And to me, this long leg down here, this break of this wedge was the end of the bear market, more or less. And then we have the base. And now when we start to break out of this wedge again, we will hopefully this time, break this very big, let's say resistance zone. And then when we start to get back up to these levels here, as we saw back in the past, that's where I will start to scale out, or even entirely, exit my strategy or my position in uranium. And from where we are right now, this the risk reward play in my book is just still very, very, very good, even though we are 2 years into the bull market. 1 second, I can't find it.
Yeah, you got to
Here
sell
it
way
is.
up there
Sorry.
in order to buy your jet after the uranium.
Yeah, exactly. Yeah. But I mean, even if you were to enter right now in my book, right, you have a 13-to-1 ratio. Because I think we'll go all the way. Yeah, risk reward. Sorry, yeah, I think we'll go all the way up here to the previous highs in this ratio, and yeah, I mean, this is incredible. I mean,
what's crazy, and I don't know if a lot of people understand this. So when that ratio goes up, it's basically a leveraged move to the price of physical uranium.
Yeah.
So if we're at uranium at like $50 and we think that it's going to go, I don't know what price it'll go to. I'm just going to make a number, $200 to make it an easy one.
Makes sense.
That's a 4x, and then it's 4x times whatever this ratio compresses to.
It's 4x as well. So that's
so
16
times.
Yeah, roughly 16. Yeah.
That is a massive leveraged play.
Yeah, it is. I mean, it sounds crazy. I mean, even though let's say a nuclear power plant blows up tomorrow and all things go to hell, right, with uranium, it's still once in a lifetime opportunity. You have I mean, imagine you can make like 16 x the investments with such a good risk reward. I mean, it's a no-brainer to me, no matter what happens. So,
and that's for 16x on URA.
Yeah, correct.
That is not 16x on everything in the sector, because there's some really small companies. There's some ones that are obscure, and maybe we know what they are, maybe we don't, which ones those are, but some of them could go up,
100,
way more than 16 times.
Yeah, exactly. And I mean, and I think, as we talked about in the beginning, baseload falls into that category, right? If they do very well and the price goes up, you will see a lot more than 16x when this is over for baseload, a lot higher. It will be in my book for one of the charts to show in like 10 years time, and people say, man, I wish I was in on that one. But yeah. But then again, it's not going to be easy, right? It's because you will see pullbacks like 40%, as we have seen in the past 6 months. We will see that again a few times before this is all over. I'm confident. So.
Yes, I know. I showed a chart with Paladin. It had massive pullbacks the entire way up, a whole bunch. So, yeah, that's it's not going to be an easy ride.
No, it's not. Just to point out this is a big pullback. This is I mean, just to do some quick measurements here, we have like 40 here, right?
Oh, there's a bunch
again.
of pullbacks.
Yeah. So 40. Yeah, 40. I mean, 40 is quite a magic number, I guess. But yeah, you will see those on the way up, and they will be gut-wrenching to you. But if you have a plan and you know your thesis, and I guess just buy on every pullback you can, and then just ride it all the way up. Yeah, ride it up. Yeah.
Do you think, so from your previous experience, you said that you had friends that were asking you about natural gas. You've got all these people kind of asking you some questions. Do you think it is possible for the normal person to buy at lows and ride this thing all the way up?
No, I mean, that's I think that's the common mistake that most people do, actually, because as if and the funny thing is, they do the exact opposite. When it comes to buying, so some goods like a pair of shoes, right? If they go on sale, they say, "Wow, I have to buy." They don't buy the shoes if they go up like 50%. They don't say, "Wow, I have to buy it." But that's exactly what people do with stocks, right? They see a stock moving like 100%. It's maybe on the news, I don't know, and then they say, "Wow, I have to buy this." And at that point, it's often too late, because that's when the masses get into the trade. It gets overcrowded. Then it pulls back like 40%, maybe, as we've seen here in uranium. Then they sell, and then it starts to gain again, and then they do the exact same. So no, I don't think people that don't understand the sector and has some kind of knowledge to technical analysis, they cannot buy low and sell high. They can't do that. So
what would you have to, so in order to buy low, sell high, make a lot of money and do all that stuff, what do you think is necessary for a new investor to figure out? What do they need to learn to get themselves to a spot where they can ride this bull market or where they can buy lows? What do they have to do in your opinion? Or what did you exactly do in your journey?
I mean, I think, I know it sounds, counterintuitive. It's not counterintuitive, but I think you need, even though I love technical analysis, I think you also need to know something about the fundamentals of the sector and the company that you're in. And that's also why I'm not doing anything right now with uranium, because I know the fundamentals regarding uranium is in place. I mean, you can't deny that. So as long as the fundamentals are in place, I'm happy where I am. And then on top of that, you can use your technical analysis to know when to buy, when to sell, and so on. So you need a bit of both, but even with a very small knowledge to technical analysis, you can actually get pretty far if you have conviction in your thesis about the sector and so on. You don't have to be the next guru or something like that. You don't.
So when you're evaluating all this stuff, and I know you've got a similar background to me, engineering and whatnot, do you follow anyone else out there? And do you actually use any of their necessary data, or do you use their opinion at all? Or is it just, what, I block everyone out, I'm going to follow my own thing, and that's about it? What's your approach there?
I mean, I follow like just below 100 people on Twitter, and I have always been very how to say it, I can't remember the exact word in English, but I don't, just because someone says to me, this is how it is, I don't trust them. Then I say, all right, I hear what you're saying, but then I want to do my own research. And if we come up with the same solution, like this is a very good sector to be in, then fine, then I will do my own, money into the sector. But until, I have convinced myself, I will not I will not spend a dime, on anything, even though someone says this is the next big thing. No, I will not.
Yeah, so you basically stand on your own logic.
Yeah,
so
exactly.
Yeah,
but I do
and your own research.
Yeah, but I do get a lot of ideas, for sectors or charting and so on, from different people on Twitter, like you or North Star, Bad Chart, the guys on Twitter. If I see something that gets my interest, it could be a ratio, it could be a sector, whatever, then I start to dig into that sector. And one sector from you was together with Scott, shipping. I haven't heard about shipping before. And then you started to talk about it, and then I found, oh, that's interesting. So I started to do my own research, right? And then I found out that shipping is actually also a place where you can make a decent amount of money if it plays out as I think it will. So yeah.
Yeah, and I know a lot of newer investors, they expect to put money into it and it just goes straight up. And it doesn't work like that sometimes. Sometimes you'll get in something really cheap and you'll have to ride it for a little bit. Even if it breaks out of a pattern, it may go sideways for a year or two, and then all of a sudden, boom, it starts to take off.
Yeah, so, but you want to buy when everything is boring. When the chart is very boring, does nothing for a long time, that's usually the time you want to buy if you're bullish on that sector. So
yeah, I agree completely.
So
I think we got everything. We got the sectors you like, we got the strategies that you're employing, and we've got the exit strategy, which you're using ratios for, at least for your uranium exit point. Is there anything else that you're using for an exit point besides using ratios?
I mean, I was in, I'm not in right now, but I was in Bitcoin, back when it started to become, to look very good. Bitcoin, that's something else, I guess. Let me find it here. 1 second. Bitcoin, there it is. So yeah, I got in. As mentioned, I don't do any charting with Bitcoin right now because I think this bull market is over, and we need to have a year or so, where we just go down or sideways. But then again, oh sorry, my entry was again over here, similar to the natural gas. Actually, I bought Bitcoin in this area here, and then I started to ride it up. And based on the previous 3 cycles, the Bitcoin bull market, you know, peaked around December-ish, November, January, maybe in that cycle. So my exit strategy, no matter what anyone said, was around December 2021 will be my exit strategy, my exit point. And at that time, you know, I knew that I was going to exit at that point. And also at that point, you know, Twitter got very was Bitcoin all over the place. It was you know, it was the next big I don't know, revolution, I guess. And at that point, I knew, you know, it's time to get out, because the trade is so crowded, and everyone is bullish. And if everyone is bullish, you know, it's typical. It's the top very often, right? So yeah, I sold my position at 55,000 in for Bitcoin, and then I left it at that. So yeah, at that for Bitcoin, my exit strategy was, you know, December in that year, you know, given previous peaks. So that was my exit strategy at that point. So if it was at 50,000 or 100, I don't know, it didn't matter to me. That was my exit.
So we're coming on down, and we're going to have to probably base out for a while, because this is going to be a big pullback.
yeah, it will be. It will be.
Yeah. And I was of the sort that we were going to come back and crash going down, but it went back up further than what I thought.
Yeah, I was actually going to say, yeah, I agree.
Yeah, I went up further than I thought, and then it crashed. So I thought it was going to crash a little earlier. I didn't think it was going to go up as high, not nearly as high.
No, I was very nervous here actually when we started to do this leg here. I was like, oops, maybe I'm wrong, but I didn't buy it. So that was good. I stayed with my conviction. You know, I had a plan from the beginning, and that was my plan. And even though if it would have gone a lot higher, I mean, it is what it is. But if you have a plan and you keep to that strategy, you will do very fine, for sure.
That's good. That's good. I don't really have anything else. What do you have anything else that you'd like to share with everybody? Any experiences or anything that you've learned that you think is important for others to hear or listen to?
No, I mean, the overall plan from my point of view with this commodity bull market is to, like, in 5 to 10 years time, hopefully take my profit and then roll it into high dividend paying stocks, you know, and have a steady income from those stocks. And hopefully my wife at that point can retire. That's my plan anyways. So yeah, that's my plan. Hopefully it will do as I hope. So yeah, exactly. All
right. Well, I mean, that's all I've got for today. And I think that's all you've got. So if anybody wants to follow you, how do they contact you or follow you?
Yeah, as you mentioned, you know, yeah, at the start of the video, on Twitter, Uselink INV, you will find me there. And yeah, hopefully you find my charts interesting. I mean, I post whatever I see. And if people don't like it, I guess then they can just, you know, follow other accounts. But that's the way I see it. Sometimes I'm right, often I guess, but also sometimes I'm very, very wrong. So, I mean, I post what I see, and yeah, that's how I do my own research, and then I post what I find important to show, or what I think is important right now. So yeah.
Yeah, I agree. I did look at all these different charts to get ideas to see what other people think. So I do the same thing as you, and then I bounce it off what I already know.
Exactly. So, yes.
All right. Well, that's all I've got for today. I really appreciate you coming on the channel. You had a great presentation here. Thank you for sharing that with us, and your opinions and viewpoints. Yep. So we'll catch you next time, everybody. Thanks for joining. Yep.
Yeah. Thanks, guys.